If you're over 65 and you've been filing the same tax return the same way for the last 10 years, there is a very good chance the IRS is sitting on money that legally belongs to you right now. And the number on that check can climb past $4,000. I'm talking about real money, money you already earned, money the government quietly holds on to every single year because the people it belongs to never claim it. And here is the part that should make you sit up. The IRS is not going to call you. They are not going to send you a friendly letter saying you forgot something. The rule in this country has always been the same. If you don't ask for it, you don't get it, and they keep it. So before you click away, give me the next few minutes because I'm going to walk you through exactly what this check is, why so many seniors over 65 are missing it, the specific reasons you may have left this money on the table for years, and the precise steps to claim it before the window closes. I'm Julian Voss, and this is Julian Voss Retirement, where I break down the money news that actually touches your life, not the stuff on the cable channels that never affects your wallet at all. Now I want to be honest with you up front, because there's a lot of noise out there and I'm not interested in adding to it. This is not some scheme. This is not a loophole that a smart accountant invented in a back room. This is the tax code working exactly the way it was written. Except almost nobody over 65 is using it the way it was designed to be used. And the reason is simple. The tax system in America is built on the assumption that you will know to claim what you're owed. It does not nudge you. It does not remind you. The forms are written in language that practically dares you to give up halfway through. And so millions of older Americans, year after year, hand over money they were never legally required to pay, or they walk away from refunds and credits that were already theirs. Let me give you a picture of how this happens, because I think once you see it, you're going to recognize yourself or someone you love in it. Imagine a woman, 71 years old, living on Social Security and a small pension from a job she held for 26 years. She does her taxes the same way every spring. Maybe she uses the same software she's used since 2015. Maybe she takes the paperwork to the same fellow at the same strip mall office she's gone to for a decade. And every year that return gets filed, and every year she pays a little or gets a little back, and she never questions it. What she doesn't know is that the standard deduction she's claiming is the regular one, the one built for working-age adults. She has no idea there's an entirely separate, larger deduction sitting right there with her name practically printed on it just because of her age. And over the years, that gap, the difference between what she paid and what she should have paid, has quietly added up to thousands of dollars. That's the heart of what I want to show you today. Because the single biggest reason seniors over 65 are owed money they never see comes down to one thing the IRS almost never explains in plain English: the extra deduction for being older. Here's how it works. When you turn 65, the tax code gives you a bigger standard deduction than younger taxpayers get. It's automatic in theory, but only if your return is filled out correctly to reflect your age and your situation. And here's where it gets even bigger for 2025 and 2026. On top of that long-standing age-based boost, there is now an additional deduction specifically created for older Americans, worth thousands of dollars more. Stack those together, and you are looking at a meaningful reduction in your taxable income, which, depending on your bracket and your withholding, can translate into a refund check that crosses that $4,000 mark. But, and I need you to really hear this part, the credit and the deduction only do their job if your return claims them. If your filing status is wrong, if your birth year wasn't entered to trigger the age bonus, if you took the wrong deduction because the software defaulted to it, that money evaporates. It doesn't roll over. It doesn't wait for you. It simply stays with the government, and the next year you start the whole cycle over again, none the wiser. Now stay with me, because I'm about to tell you the most important thing in this entire video, and it's the thing most people get wrong. There is a difference between being eligible for money and actually receiving it. The IRS treats those as two completely separate worlds. You can be 100% eligible, on paper, for every dollar I'm describing, and still receive exactly nothing, because eligibility is not a payment. The only bridge between the two is the act of claiming. And the good news, the genuinely good news, is that even if you've missed it for years, you may still be able to go back and get it. That's the part nobody tells seniors, and it's the part I'm going to explain before we're done. So don't go anywhere, because the timeline on this is tighter than you'd think. Let me back up and explain why this money exists in the first place. Because once you understand the why, the whole thing stops feeling like a trick and starts feeling like what it actually is, a right. The reasoning behind the age-based deduction is straightforward. Lawmakers recognized decades ago that people on fixed incomes shouldn't be taxed the same way as someone in the prime earning years of their career. When you're 71 and living on Social Security and savings, a dollar of tax hits you very differently than it hits a 40-year-old at the top of their pay scale. So the system was built to give you breathing room, a larger slice of your income that the government simply agrees not to touch. That's the extra standard deduction for being 65 or older. It's not charity. It's not a handout. It is a deliberate adjustment written into the law to protect older Americans from being squeezed. And then, more recently, on top of that, came an expanded deduction aimed squarely at seniors, a recognition that costs have climbed, that fixed incomes have been stretched thin, and that the older population needed more protection from taxation than the old numbers provided. This newer benefit is exactly the kind of thing that slips past people because it didn't exist when many seniors first learned how to file, and old habits are powerful. If you learned to do your taxes a certain way in 1998, you are probably still doing them that way, and the form has changed underneath you without you ever being told. So who exactly is this for? Let me be specific, because I don't want you guessing. This matters most for you if you are 65 or older, and if you turned 65 at any point during the tax year, even on the very last day of December, you generally count for that whole year. It matters most if you live primarily on Social Security, a pension, modest retirement account withdrawals, or some combination of those. It matters enormously if you are a single senior or a widow or widower, because so many of you are filing alone now, and the deduction amounts and rules shift when you're on your own. And it matters if you've been filing the same way for years without anyone reviewing whether your return actually reflects your age and your current life. If that's you, I want you to treat this video as the nudge the IRS will never give you. Here's a question I get constantly, and I want to answer it head on. People say to me, Julian, if I'm really owed this, wouldn't my tax software have caught it? Wouldn't my preparer have told me? And I understand why you'd think that. But here's the uncomfortable truth. Software does exactly what you tell it to do. If the date of birth wasn't entered, or was entered wrong, the program has no way of knowing you qualify for the age bonus. It just quietly gives you the regular deduction and moves on. And preparers, even good ones, are often working through a stack of returns in a few short months. They process what's in front of them. Unless someone stops and specifically checks whether your return is optimized for your age and your status, the default settings win, and the default settings do not favor you. I'm not saying anyone is cheating you on purpose. I'm saying the system rewards the people who know to ask and punishes silence, and seniors have been kept silent on this for far too long. Now let me walk you through the actual mistakes that cause this money to slip away, because once you can name them, you can fix them. The first and most common is the wrong deduction. Some seniors itemize when the larger senior standard deduction would have saved them more, and some take a standard deduction that wasn't adjusted upward for their age. Either way, taxable income ends up higher than it ever needed to be, and higher taxable income means more tax paid or a smaller refund. The fix is to make sure your return reflects the correct age-adjusted standard deduction, and to compare it against itemizing to see which genuinely wins for you. The second mistake is misentered or missing age information. I know it sounds almost too simple to be real, but a wrong birth year, or a date of birth that never made it into the system, is one of the most common reasons the age bonus never triggers. The computer simply doesn't know you're 65. The fix is to verify that every return you file clearly establishes your age, and if you're filing jointly, that both spouses' ages are correctly captured, because the deduction can stack when both of you qualify. The third mistake is overpaid withholding on income that shouldn't have been taxed the way it was. A lot of seniors have taxes withheld from pensions or retirement withdrawals at rates that don't match their real, much lower, post-deduction tax situation. They're essentially overpaying all year and then never reclaiming the difference because their return doesn't capture the full deduction they're owed. The fix begins with claiming the right deductions, which lowers your true tax, and then adjusting your withholding going forward so you stop overpaying month after month. The fourth mistake, and this one breaks my heart every time, is simply not filing at all. There's a belief among some seniors that if your income is low enough, there's no point filing because you won't owe anything. But here's the catch. If you don't file, you cannot claim a refund. And if money was withheld from your pension, your part-time work, or anywhere else during the year, that money is only coming back to you if you file a return to ask for it. Seniors who skip filing because they don't owe routinely leave refunds sitting with the government, refunds that were theirs from the start. The fix is to file even when you think you don't have to, specifically so you can claim what's waiting. And the fifth mistake is the one I want you to remember above all the others, assuming this year is the only year that counts. This is where the $4,000 number can actually grow well beyond that, because the rules generally allow you to go back and correct a return for a limited number of past years and claim a refund you missed. If you've been making the same deduction mistake for 3 years running, that's not one missed deduction, it's 3. And the bridge to recovering those is filing what's called an amended return for each eligible year. There is a deadline on this, and that deadline is exactly why I keep telling you not to wait. The oldest year in your window closes first, and once it closes, that money is gone forever. You don't get a second chance at it. So let me lay out the steps as plainly as I can, the way I'd explain them to my own mother across the kitchen table. Step 1. Pull out your most recent tax return, the actual filed copy, and look at 2 things. Look at the deduction amount you claimed, and look at whether your age was reflected. If you can't tell, that itself is a red flag worth resolving. Step 2. Confirm your correct filing status, because single, married filing jointly, and qualifying widow or widower all carry different deduction figures, and the wrong status quietly costs you. Step 3. Determine whether you claimed the additional age-based standard deduction you're entitled to as a senior, plus any expanded senior deduction available for the year in question. Step 4. If you find that a past return shorted you, look into filing an amended return for each year still inside the allowable window, and do the oldest one first, because that's the one about to expire. Step 5. Fix your withholding going forward so you stop bleeding money every month on income that's being overtaxed. Now I want to address the fear I can already feel some of you having, because it's a real one. There's a worry that the moment you touch an old return or file an amendment, you're going to wave a flag at the IRS and invite trouble. Let me put that fear in its place. Claiming a deduction you're legally entitled to is not a red flag. Correcting a return to reflect your true age and status is not suspicious. It is exactly what the system is built to allow. What actually draws scrutiny is sloppy, inconsistent reporting, not the orderly claiming of a benefit written into the law for people in your exact situation. You are not gaming anything. You are collecting what was always yours. The people who should be nervous are the ones who don't keep good records, not the ones who calmly fix an honest oversight. Let me come back to that woman I described earlier, the 71-year-old with the small pension, because I want you to see how this plays out in real life. When someone finally sits down with her return and notices the deduction never accounted for her age, the difference in her taxable income is significant. Lower taxable income means she overpaid. Multiply that across the prior years still open to amendment, and suddenly we're not talking about a small adjustment. We're talking about a stack of money coming back to her, money that was going to sit with the government indefinitely if no one had ever looked. She didn't break a rule. She didn't find a loophole. She simply claimed what the law had set aside for her all along. That is the entire story here, and it can be your story too. Here's something else most seniors never think about, and it's worth a moment. This isn't only about the refund check. When you correct your deductions and your withholding, you change your monthly cash flow for every year that follows. You stop overpaying. That means more money in your pocket each month. Money for groceries, for medicine, for your grandkids, for the small dignities that make retirement feel like the reward it's supposed to be. The one-time refund is the headline, but the ongoing savings is the part that quietly improves your life for years. Both come from the same root, making your tax return actually reflect who you are and how old you are. I also want to warn you about something, because where there's money, there are always people circling it. The moment you start looking into senior tax benefits, you may notice ads and calls and emails promising to get your IRS money for a fee, or asking for your personal information to verify your eligibility. Be careful. The IRS does not cold call you to offer you a check, and they do not demand gift cards or wire transfers or your banking passwords. Everything I've described today is something you can pursue through legitimate official channels: the real return, the real amended return, the real forms. You don't need to pay a stranger a percentage of your own money to claim what's already yours. If anyone pressures you, rushes you, or asks for payment in an unusual form, that's your signal to stop and walk away. Protecting the money is just as important as claiming it. So let's talk about timing, because this is the piece that makes the whole thing urgent rather than something you file away for someday. The window to amend a past return and claim a missed refund does not stay open forever. Each year you could go back and fix has its own expiration, and they expire on a rolling basis, meaning the oldest eligible year is always the closest to slipping away. Every month you wait, you are inching toward the day when one of those years locks shut permanently. I've watched people discover they were owed money for a year that closed just weeks before they got around to looking. Don't let that be you. If there's even a chance you've been claiming the wrong deduction, the cost of checking is an afternoon of your time, and the cost of not checking could be thousands of dollars gone for good. Let me also clear up the confusion between a deduction and a credit, because people mix these up and it changes how you think about the money. A deduction lowers the amount of your income that gets taxed in the first place. A credit lowers your tax bill directly, dollar for dollar, after the tax is calculated. The age-based standard deduction I've been describing is the big one for most seniors, but depending on your income and situation, there may be credits available to you as well. Credits designed for older or lower income taxpayers that, like everything else here, do nothing for you unless they're claimed on your return. The principle is identical across all of them. The law puts the money on the table, and you have to be the one to pick it up. Nobody hands it to you. Now, I know some of you are sitting there thinking your income is too high for any of this, or too low for any of this. Let me address both. If you think your income is too high, don't assume. The thresholds and phase-outs are not where most people guess they are, and the age-based deduction applies broadly to seniors, regardless of whether you're scraping by or comfortable. And if you think your income is too low to bother, that's exactly the group that most often leaves refunds behind. because you're the most likely to skip filing and the most likely to have had money withheld that you never reclaimed. In other words, both ends of the spectrum have something to gain by actually checking instead of assuming. Assuming is the single most expensive thing seniors do with their taxes, and it costs the quiet ones the most. I want to give you one more way to think about all of this, because I find it helps people take action. Picture the money you're owed not as a bonus, not as luck, not as some windfall that fell out of the sky, but as your own back pay. It's wages you earned, benefits you contributed toward, income you generated, that got taxed more heavily than the law required. Getting it back isn't asking for a favor, it's recovering an overcharge. If a store charged you twice for the same item, you wouldn't feel shy about asking for the difference back. This is the same thing, just larger and quieter and stretched across years. You are not begging. You are correcting an error in your favor that the system was perfectly happy to leave uncorrected. So here's what I want you to do the moment this video ends. Go find your most recent tax return, the real one, the filed copy. Look at the deduction. Look at whether your age was ever accounted for. Check your filing status. And if anything looks off, or if you simply can't tell, treat that as your signal to dig deeper into the prior years that are still open, starting with the oldest one because it's the first to expire. If you've been filing the same way for years without anyone reviewing it through the lens of your age, the odds that you've left money behind are not small, they're significant. And the only way to know for sure is to look today while the window is still open. I make these breakdowns because the financial press spends all its time on the stock market and the headlines and almost none of it on the everyday rules that quietly drain the accounts of older Americans. Nobody is looking out for the 71-year-old with the small pension. Nobody is calling to tell her she overpaid. So I do it here, one topic at a time, in plain language, with no jargon and no fear-mongering, just the facts you need to keep more of what's yours. If this helped you, or if it made you think of a parent or a neighbor or a friend from church who's been filing the same way for a decade, do me a favor and pass it along to them, because this is exactly the kind of thing that never reaches the people who need it most. The IRS won't tell them, you can. And if you want more of this, the tax breaks, the bank rules, the Social Security moves, the quiet exemptions that the agencies will never explain on their own, then stay close to this channel, Julian Voss Retirement, because I'm going to keep pulling these things into the light one by one. Being over 65 in this country comes with a whole set of financial rights that almost nobody hands you on a silver platter. My job is to make sure you know they exist so you can claim every single dollar that has your name on it. So don't let another tax year go by on autopilot. Don't assume the software caught it. Don't assume your preparer flagged it. Don't assume you don't qualify, and don't assume it's too late until you've actually checked. The money I've described is real, it's legal, and a meaningful slice of it may be sitting there right now waiting for you to claim it. The only thing standing between you and that check is the decision to look. Make that decision today, while the oldest window is still open, because once it closes, that money stops being yours and starts being theirs, permanently. Go pull that return. Your future self and your wallet will thank you.